Yeah, I'm gonna do. I'm lagging pretty bad. I left a Gen X investor there. He says it must be the snow in Canada. Unfortunately, we don't get the luxury of commission free here. That's something that doesn't exist. And anybody from Canada that says we do
It's
commission free,
75
you got to
here in
look at
Virginia.
the terms of use, man. Every terms of condition here is then it's management fee. If it's not commission, it's management. But yeah, we got some snow here. I don't know. Usually around this time, you get all the kids coming home playing Fortnite. I don't know. We have rural internet. It sucks sometimes. But I definitely want to touch base with you, independent investor, for sure, because it'd be fun to get us all on a stream again here. But also, I want to ask Dustin, do you have any social media now? Are you publicizing any of the stuff you're doing? Is there anything you want to shout out so I can go take a look at it after the fact before I jump off here?
Well, I have my Instagram as my name right here on stream, so it's dustin.bbb, but I haven't really been posting anything on there. I was posting on my story for a while about me and my forex business when I was doing that, or still am. Just haven't been posted about that in a while. Moving silence kind of right now.
All right. Well, maybe we'll see you one day on a YouTube channel, just like us, just trying to build some other passive income sources here. But yeah, no, it'd be fun to catch up, maybe even a year or two from now, and see how you're doing. But I'm gonna catch you guys in the chat. So stay awesome, and I look forward to chatting to y'all real soon.
Yeah, thanks for joining, Kyle.
Thank you.
But yeah, Dustin, do you have any other questions for me and Ryan? We got an investor sandwich going on right now.
Oh my! What else? I don't think really any other questions except I just got to go watch videos about the education I don't have really towards it.
Yeah.
About my setting up a balance spreadsheet, all that, and picking individual stocks. And you guys said get into you said index fund or ETF and index funds the same, or were those two different things?
An index fund is kind of like the baseline at which ETFs are generally kind of tracked against. So an index fund is like an ideal sort of, well, Ryan, you have probably a better idea. You deal with this stuff more on a day-to-day basis.
So an ETF and an index fund, think of an index fund as being a super low cost, like a mutual fund. It's a low cost product that tracks the market, and it trades like a mutual fund, okay? Whereas an ETF is going to be just about the exact same thing, except it trades more like a stock. So you can buy and sell it during the actual trading day. I did a lot of deep dive analysis on the actual holdings of ETFs versus index funds, and I found them to be very good, but they're extremely similar in nature, just bundled up in a little bit different package and sold to investors. So I prefer ETFs. That's just my preference. I don't think there's really any reason to split hairs on looking at the comparable S&P 500 index fund versus the ETF. And that's just the way I prefer it. It really does come down to preference, but not to be understated, right? You're 18 years old. I've already mentioned dollar cost averaging to you. Don't forget the importance of diversification. Diversification, man, is what you're buying when you're buying that ETF, when you're actually buying that total market. So when you look at one share of the VOO and it's $280, you know, it seems like, and it is a lot of money. It really is. But please understand kind of what you're buying. You're buying the entire market, all 510 companies that represent the S&P 500, all at the same time. So you're buying little pieces of each one of them. So you're constantly getting those bottom end companies in the S&P 500 constantly rotating in and out. So basically over the course of your entire life, you're having the best exposure to the large capitalization stock market in the U.S.
It's basically a bet on the United States, you know, and that's exactly what Warren Buffett says. He says if it wasn't him managing the money, he would just put it in an S&P 500 index fund because he bets on the United States, and it's worked for the past 200 some years, and it's going to work hopefully for the next 200 or more. And that's what he's basically tracking, is just hoping that the United States economy continues to be one of the best in the world, and that's really what he basically is trying to do. A lot of people, mutual funds, actively managed ETFs, most of the time, like Ryan is saying, don't really beat the S&P 500, and so most of the time it's basically just put your money in the S&P 500 if you want to be passive. If you are a hobbyist like myself and Kyle as well, and I know Ryan does some independent stock investing as well. I do it for a hobby, so I'd rather sacrifice 1% or so, because at the end of the day, I like to look at it every day, and if I'm just looking at ETFs, it's not going to be as fun for me. But since I'm kind of a collector of stocks, it makes it more interesting for me on a day-to-day basis to come in, check out my spreadsheets, spend time getting my hands kind of in the spreadsheets, and because that's what I do at work as well. I make spreadsheets and trying to make sense of businesses and investments, and so it's just an extension of what I'm doing on a day-to-day basis at work, just with the stock market rather than oil and gas projects. So, but yeah, that's kind of what my thought is on the difference between index and ETFs, and really is very dependent on how active or passive you want to be. It seems like you want to be very active. So, yeah, of course.
That's what they all say.
Yeah.
I have to change up my strategy.
Yeah.
Looking at it.
So if you want to be active, that's cool, but there's no harm in, even doing a 50-50 split. I know some people, they start off very active in stocks, and then they get either bored of it, or they realize that they'd rather just hand it over to the market and let it be. And there's no harm in admitting that, so not sure if you have any thoughts on that you want to chime in about.
I just will comment on, your assessment that the stock market is a hobby. I think that's awesome. I'm the same way. It's hard to relate with guys like us because we're monitoring the market daily. It's just it's as good as anything to be addicted to, for lack of better terms, honestly. I mean, kids your age, and I don't mean to offend you, but 18 years old, it's been a while since I've been 18 years old, but your generation, man, is so smart. Not only that, but you combine those smarts with the opportunity that you have nowadays, you can really accelerate, at least from a financial perspective, right? I don't know you personally. I don't know what your dreams and ambitions are. I don't know but as far as the financial piece, this is something that you can get right now. And I think once you get it right, you can work really hard doing some work, getting the stuff started, doing some education on your own. And then you're going to find that once you get everything started initially, it can become boring. Okay. Unless you take on a profile like myself and Matt, where we are really trying to accelerate wealth for ourselves. And it's possible because we've provided that option for ourselves. Okay. Good on us. Priority is number one for investing. I don't want to speak for Matt, but for me, it's right there at the top of the list. And I think a lot of people that I talk to, they say they want to become an investor, but are you really willing to walk the walk? Are you really willing to do the homework that it takes to take on this? And it's fun. Don't get scared off when I say that it's a lot of hard work and that very few people can do it, because I contend to the opposite. Anybody can do it. Anybody. And you do have an investor sandwich going on right now. We're going to run at you because here's the thing: we've got decades. Well, at least me, I've got some. I'd say Matt's 28 years old, but he speaks like a seasoned investor. I mean that in the best of compliments for Matt, for sure. But I always try to consider my audience, and at 18 years old, how much experience do you really have? So when I make my comments about what I should do, how should I start, I really do try to talk, in a way that condenses a lot of years and decades of experience and just talk to you,
Yeah.
Just real talk.
Yeah. I don't think I got any more questions. We've gone through a lot.
Yeah.
You just changed your life tonight. No big deal.
Yeah.
Good luck sleeping tonight.
Yeah, hopefully, yeah, it is a lot to learn, and like I said, it's a lot of soul searching, and it's a lot of understanding what you believe and evolve once you get more and more experience. Like you said, you're 18. It took me from 22 to probably three and a half years ago to get to a point where I recognized dividend investing was for me. So it took me, from 22 to just after I turned 22 to probably 25. So 3 years or so, making mistakes, trial, error, to come to the point where I'm like, this is my new path. This is my polished strategy. This is where I made mistakes. And luckily I did it in a bull market where I didn't necessarily have any too drastic of changes, but what I recognized was, or too drastic of losses or anything like that. But yeah, I mean, you have an opportunity to start at 18. Mm-hmm. I mean, if you make the right decisions, you polish, you recognize yourself, where you want to be, your objectives, your horizon, your risk tolerance, all those huge things that kind of underline your foundation of your investment portfolio, you're going to be way ahead of everybody that's in your age group.